Late last week, after the announcement of Trump's tariffs, I did a YouTube short where I gave my hot take. And I said that the tariffs were going to have three main impacts on housing that people should be aware of. I said, number one, I was concerned about jobs, concerned that there would be job losses and that was going to hurt the housing market, and that while things are uncertain, that there would be less sellers, less buyers, and that house prices probably wouldn't move much, was what I was implying. Number two, I said that because of the tariffs on Canada, new construction was probably going to get more expensive because most of our wood for new home building comes from Canada. A lot of our supplies for drywall and the glues and things that we use in home building come from Mexico. So it just made sense. 25% additional tariffs on those two countries would mean that materials are going to be 25% higher, which would be added to the cost of homes, right? And then number three is I was talking about how interest rates are likely going to come down given their relationship to T-bills. Now, I preface with all of this to say, you shouldn't do hot takes. I shouldn't do hot takes. Nobody should do hot takes, because the problem with a hot take is that there's like kind of a 50-50 chance that you're right or that you're wrong. And I was really just going off of reports that I had heard, and especially on point number two about the 25% increase on building materials because of the tariffs on Canada and Mexico. I was wrong. And it feels good actually to say that, because I know how hard it can be for a lot of people to come on and in a long form video just say it like, hey, I was wrong. And I'm actually very glad to be wrong, because there are some provisions that a lot of news media sources did not pick up on, but there are provisions in the tariffs on Canada and Mexico that actually make it so that lumber and other materials that are essential for home building were excluded or exempted from the additional tariffs. So lumber costs and whatnot are not going to go up. In fact, they might even come down a little bit, because there was so much panic buying in the last week that now people that panic bought those materials are even selling them at a discount. This is from a conversation that I was having with a local builder here in Clark County who had just sent out an email to all of their clients to say, hey, relax. It's all going to be okay. So it's been about a week since Trump's announcement of the tariffs. And yes, a trade war is ensuing. Yes, the economic times are still very uncertain, but this is not so much a hot take. I'm hoping that this is going to be a more calm, cool, collected take that will help you as somebody who's trying to navigate the housing market, especially as a self-represented home buyer with just, all right, what should I expect? This is the DIY Homebuyer podcast. My name is Nick. I am your host. Of course, if you're new here, this is a show that really all the episodes are geared towards preparing you to purchase a house successfully without hiring a costly buyer's agent. I've got tons of videos on how to do that. But in this episode, we're really just going to dive into tariffs and their impact on the housing market today. If you want like the Cliff Notes version, here it is. The tariffs are going to change almost everything, but because they're changing almost everything, I think almost nothing is going to change. How's that for a proverbial sort of a statement? But it's true. As I think about what is going to be the net effect of the tariffs on the housing market, I think that there's actually very little in the housing market that is going to change for home buyers and sellers today, in the next 3 to 6 months. I just think that the changes coming about from the tariffs are huge, but the net effect of them, everything's going to kind of balance out, and we're not going to see crazy shifts in the housing market. Now, the first thing that comes to mind is jobs. So with the tariffs being created, there are certain businesses that their profitability is going to get hurt. There's also just a lot of economic uncertainty in the air. And so, going back to my short form video from last week, I do stand by my claim that my biggest concern about these tariffs is that it will lead to layoffs and job losses. And this is a big deal for home buyers, especially if you're working for a big multinational corporation that is impacted by these tariffs. I don't blame you if you have some hesitations about moving forward on buying a house because you want to make sure you've got good job stability. And I think, too, there will be a number of homes that go under contract in the next couple of months, and then buyers cannot qualify because there will be layoffs, job losses, and those people won't end up being able to get approved for the loan, therefore close on the home. In that, you should make sure that if you are buying a home and you are working a W-2 job for one of these big companies, corporations, make sure you've got a solid financing contingency so that if job loss happens or something that's outside of your control, you're able to back out of a home purchase without losing your earnest money or worse, being sued for specific performance where you have to move forward and buy the home. Have that financing contingency in place, really be talking with your lender. And I would even communicate with your employer, depending on the relationship you have with them. Let them know that, hey, I'm thinking about buying a home right now. I'm concerned about where things are at economically. What kind of assurances can you give me here that I'm not going to have the rug pulled out from under me? I think that's a wise conversation for home buyers to be having with their employers, because job losses are of a major concern in my books. Now, when it comes to tariffs' impact on the market, we've seen kind of an inverse correlation between the stock market and mortgage rates. I suppose it's not really, it's inverse in as much as the benefits to the consumer are inverse to one another. But if you followed the news at all, you know that in the last week, the stock market has taken some significant hits. It has fallen hard over the last week. And it depends on who you listen to for your economic news. Some economists are predicting that there could be another 10, 15, even I've heard some extremists say like a 20% fall in the stock market over the coming months. Other economists are saying that, hey, we're pretty close to the bottom. There might be a few little things that shake out, but we're not talking anything more than another 4 or 5% drop. Now, I realize that's still a significant amount. I'm not trying to be your economic expert here, just saying that yes, the stock market has come down. It could come down further. And that uncertainty in the market is bad news, especially for cash buyers or people that are planning to convert some of their stocks into cash in order to purchase a home. This creates a lot more uncertainty for those buyers because it's hard to watch your stock portfolios go down while you're also thinking about buying a home. Nobody wants to exit as the stock prices are falling. But while stock prices have fallen, so have interest rates. And this is really good news for home buyers that were planning on getting a home loan, because in the last week, we saw interest rates drop to the lowest level of the year and the lowest that they've been since October of 2024. There's some FHA buyers that were in the mid to low 5% range. Conventional mortgages, I was seeing people get approved in the low 6%, like 6.25. It was over a 0.5% drop in just a week's time. It's hard to overstate how massive of an impact those drops in interest rates have on housing affordability. And as the stock market, if it continues to come down, I believe that interest rates will also continue to come down, and that it will correlate some with how much the stock market comes down. If the stock market does crash harder, that interest rates will fall even further. And that's in large part because of this relationship between the interest rates and treasury bonds, T bills, where when Stocks go down. Investors are looking for safer places to park their money. T-bills are one of the number one places, that the 10-year T-bill, where people will go. And when more people are investing in the T-bills, the yields drop lower. And when those yields go lower, interest rates seem to follow that T-bill, the 10-year T-bill yield rate. So as those yields are lower, interest rates always seem to come down. And again, when those T-bill rates are higher, well, you get it. What happens with interest rates? They go higher then too. So that'll be a really fascinating piece to watch. But it does mean that home buyers who are planning to get a loan, well, now your dollar goes a whole lot further because you're paying significantly less in interest. I mean, just a month ago, people were paying $20,000, $30,000 in order to buy their interest rate down by 0.5% at best. And now, just basically overnight with the tariffs like that, $20,000, $30,000 in prepaid interest, like it's gone, and interest rates are lower. If you're thinking about getting a loan, buying a home, it would be a really good time as a home buyer to talk with your lender and just ask, okay, what do rates look like today? And since we last talked about my pre-approval, how does this impact my monthly mortgage payment now that rates are lower? That would be a very, very good conversation to have. In terms of new construction, I've already made the correction about how the tariffs, they won't impact wood and building materials in the way that last week people, even including myself, had originally thought. So that's great news, that if you're going under contract or already under contract for a new construction home, we shouldn't see the kind of escalation clauses, material increase, cost increase that we saw back in 2021, 2022, where builders were having to come back to home buyers that were under contract and say, hey, we actually need to increase your purchase price by 30 grand because the materials are now way more than what we were estimating in the original price. Hopefully, we won't see any more of that as a result of these tariffs. And that is because of the exemptions that were made for wood and for the glues and the different materials that we import from Canada and Mexico. Now, the problem is builder confidence is still really low, especially in like markets in California. This is a little bit regional, depending on what consumer demand is, but the builder confidence is low. And when builder confidence is low, builders don't want to build, and they don't want to build spec homes because they don't want to be left holding the bag and just having to do price reduction, price reduction, price reduction. These builders, they exist to turn a profit. They're not just doing community service by building houses and selling them at cost. And so with the builders' confidence being low, not building as many homes, well, that's going to have an impact on supply, where we're not going to see the kind of increase in supply, especially in high demand markets, that we need to see in order to offset high house prices. When the supply doesn't increase, but demand does, it just means that homes get more expensive. So until builder confidence increases, I don't think that there's going to be really any reason for builders to reduce prices, nor will the builders have any real impact on the resale market. And speaking of the resale market, just to drill a little bit deeper here, with the uncertainties in the market, I think there's going to be a good equilibrium between there's a number of would-be sellers that are going to hold off on listing their homes, and there's also a number of would-be buyers that are going to hold off on buying, which means that there's, again, going to be an equilibrium of, yes, we'll see less houses come on the market than we had originally thought or hoped prior to the tariffs, but there will also be about the same number of buyers that choose to sit out and wait for more economic certainty, which means that the supply demand levels won't really change, and therefore house prices won't really change either. So the best news in all of this, if you're buying a home, is that interest rates will likely come down and they're likely not going to spike back up to the levels that they were. I mean, if you've looked at interest rate graphs over the last year, it's just been this like well, really, it's been plateaued at about 7%. And then a week or two, it'll drop down into the mid to low sixes. And then it'll pop back up to about 7% for months and months on end. And then now we've seen a precipitous drop. And I think that now, like, we're going to have a new level for that plateau where it's going to be lower than it has been on average for the past year. That's what I'm predicting. That's great news for home buyers. I don't think that home prices are going to come up too much. And so if you are feeling good about your job security, feeling good about your financial situation, it's probably a good time to be able to capitalize on the fact that sellers aren't going to be increasing their prices right away, and that you're able to get that lower interest rate, which functionally makes the house a whole lot more affordable than it was just a few weeks ago. So if that's you, then you're feeling great. If you do have, you're a cash buyer and you were planning to buy by converting stocks to cash, yeah, I feel you. This might be a better time actually to just take the hit on some of the origination fees and consider getting like a 15-year mortgage or even an adjustable rate and pay it off when your stocks recover in the next couple of years. That would be something I would encourage folks that I'm working with to really look into and run the numbers comparatively. I also think that we're going to see a lot more house to sell contingencies because most home sellers are also home buyers. And so if that's you, where you're planning to sell and then buy, even if you could qualify to purchase your next house without the house to sell contingency, because of how much economic uncertainty there is, it's probably best to just insist on the next house that you buy having a house to sell contingency so that you don't get stuck paying a mortgage on two places or stuck with the responsibility for both. And I think that sellers are going to have to become more willing to entertain offers that have the house to sell contingency. I'll do another video unpacking a house to sell contingency. So do make sure that you subscribe to the channel and hit the bell icon so that you get notifications when that comes up. But those are really my thoughts on what's happening with the tariffs. I think that, yes, a lot of economic uncertainty. Yes, hard to see stock portfolios going down, but even those uncertainties, they're affecting buyers and sellers similarly. They're affecting builders similarly, such that supply and demand dynamics aren't going to change too much. And even though stocks are going down, interest rates are also falling, which does actually make houses more affordable. And because home prices aren't going up, you get the full benefit of those reduced rates, at least for these next few months, where I think rates will stay low, but I don't foresee house prices coming up a whole lot because I just don't see a lot of new buyers entering the market when things are so felt up in the air with the tariffs. Those are my thoughts. I appreciate you hanging around to hear them. I want to know your thoughts, though. What did I miss? What am I not considering? And if this is your kind of thing, please do subscribe, leave a review, and share it with somebody who is thinking about buying a home or who has been freaking out about the tariffs. I know I'm not like the clickbaity, everything's going to crash and burn, or the all sunny skies, overly optimistic that this is going to be the second coming of 2020 where housing is just going to boom. I know it can be kind of boring to be like, well, Nick's saying that nothing's going to change, but hopefully you follow with the reasoning of why I'm landing in that moderate position. I think that it's rational. If I really felt like a crash was coming, I'd tell you. And if I really felt like, things are just going to boom and house prices are going to skyrocket, I'd tell you that as well. I do think that these uncertain times create a unique opportunity for home buyers with a good, stable job situation to enter into the market and get a good basis price on your home, where home prices are level. I don't see them coming down much, but you're also able to take advantage of this significant dip in interest rates. All right, y'all. We'll see you in the next one.